The way we have gotten to our bull price target, and our bull price target, the probability on that has increased with the ETF significantly. And
what is that bull price target?
$1.5 million.
Let's go.
By 2030. 6.5% of all financial assets are allocated to Bitcoin. For those of you who invest in the equity market, you might notice that there are a few stocks that are taking all the oxygen out of the room. They're called the Mag 6.
Cathie Wood begins by highlighting the critical issue facing emerging markets, the depletion of reserves due to capital flight. When these economies run out of reserves, it spells disaster. However, Wood posits that by incorporating Bitcoin into their balance sheets, emerging markets can create a valuable hedge against their depreciating local currencies. Bitcoin, which has historically appreciated, provides a stark contrast to the decline seen in most fiat currencies. Cathie Wood's analysis leads to a bullish price target for Bitcoin of $15 million by 2030. This ambitious projection is based on three major assumptions.
Emerging markets, what is the death knell for an emerging market? It is when they run out of reserves, capital flight, running out of reserves. And so if these emerging markets put Bitcoin on their balance sheet and it's appreciating as their own currency is falling apart, that is a beautiful hedge. And they're probably going to increase their allocation over time as they appreciate that this is a risk. And look what the trend of Bitcoin has been. Look at what the trend of most fiat currencies has been, right, relative to anything, the dollar or gold. And even the dollar relative to gold has been a terrible investment over since the Fed came into being. So I think emerging markets are going to start, but people inside of emerging markets need this insurance policy. And, you need, and I used to say this, and then I met KG
KG.
I used to say all you need is an internet connection and a smartphone. And you have your insurance policy. You can buy Bitcoin. Now, I guess with SIM card, you can access Bitcoin. That's marvelous. Anyway, insurance policy against confiscation of wealth. Confiscation of wealth, that's inflation for sure. It's outright confiscation as well of wealth, as the Prince's, MBS's cousins, I guess, learned the hard way at the Ritz Hotel. So wouldn't it have been nice to have that key, right? They had a quarter of their wealth taken away, something like that. So the insurance, the way we have gotten to our bull price target, and our bull price target, the probability on that has increased with the ETF significantly. And
what is that bull price target?
$1.5 million.
Let's go.
By 2030. Let's go. Yeah. So there are three major assumptions we're making there. That Bitcoin really becomes half the size of the gold ETFs. Right, or
so
the
it's like $13 trillion as their market cap.
Yep. Gold investments, so half that size. And the interesting recent statistic there, David gave me this the other day, is that if you look at 13F filings for the first quarter, this is mostly hedge funds we're talking about. For every hedge fund putting funds into a gold ETF or gold, there were 10 putting them into the new Bitcoin ETFs. That's pretty big, right? So that's our first assumption.
Yeah.
The second is back to the emerging markets. If you look at global money supply and you take away the big four, maybe you shouldn't, but let's take away US, Europe, UK, and Japan out of the global money supply. If you assume that the rest of the money supply, that 10% of it is really reallocated to Bitcoin, it's really the money supply, right? And it could be through treasury, it could be through the treasuries of companies. It could be individuals trying to protect themselves from, destruction of wealth and purchasing power. We're assuming only 10% of that residual goes to Bitcoin. So these are conservative assumptions, I would say, right? And then the third is the institutional. These are the major ones. There are others. There's remittances and so forth. But so institutional involvement, we assume that 6.5% of all financial assets are allocated to Bitcoin. So in global asset allocation, this does include real estate and commodities and, gold and everything, but 6%. And the way we got to that number is that's, maximizing the Sharpe ratio, return per unit of risk is maximized, and really, volatility is not a consideration. In that study, if volatility is, if you really care about it, you'd probably want to allocate 2.5%, but 6.5%. So.
While advocating for exposure to Bitcoin and disruptive technologies, Wood also advises maintaining a well-diversified portfolio. She acknowledges the benefits of traditional investments, but stresses the importance of including innovative companies and digital assets to capitalize on future growth and technological advancements. In addition to Bitcoin, Wood highlights the potential of digital wallets and fintech companies. ARK Invest holds positions in companies like Coinbase, Robinhood, Block formerly Square, and Sophie, which are at the forefront of the digital financial revolution. These companies are developing platforms that integrate seamlessly with Bitcoin and other cryptocurrencies, enhancing their utility and accessibility.
For those of you who invest in the equity market, you might notice that there are a few stocks that are taking all the oxygen out of the room. They're called the Mag 6, right? And we've been hurt badly because we've been pulling away from them because of truly disruptive innovation. Now, they might, they will enjoy the fruits of innovation, but the companies we're investing in are not in benchmarks, and no one's paying attention to them because they're not. When I say no one, I mean in the traditional asset management world, if a stock is not in one of the broad-based benchmarks, they kind of don't want to follow it. The benchmark is the bogey, right? And so I believe we are witnessing the most massive misallocation of capital in history. I really believe that. Now, most people disagree with me on that in the financial markets. So that remains to be seen. So the one thing I would do is, sure, if you're in a very well-diversified portfolio, as most advisors would suggest, you'd want some of the broad-based benchmarks and exposure to some of that. But if the world is going to be as disrupted as we think it's going to be, you really do need to be exposed to those companies, and they're down and out right now. Again, they had, and we certainly did in 2020. We had a massive run, and now our portfolios are at about a quarter of where they were at their peaks. That's how down and out they are.
Wow.
And, just in portfolios where we cannot hold ARKB or, hold, that's really the only instrument, or GBTC. We hold Coinbase, we hold Robinhood, Block for Cash App, and everything Jack and team are doing around Bitcoin, and even a little SoFi. We're looking for the digital wallet. That's going to be one of the biggest opportunities out there. And so that's the kind of smattering you'll get in our portfolios. You will not see those stocks in traditional portfolios. They're just too scared of them. In terms of traditional financial services, we do think what Chris Bernesky calls now the internet financial system instead of DeFi. we do think that's going to be very disruptive longer term to traditional financial services. Peer-to-peer, taking out the middleman. I mean, if you go into our Big Ideas 2023 and 2024, you will see how many steps there are between a purchase, between the consumer and the merchant. How many toll takers there are along the way. I think we're going to get rid of a lot of toll takers, and we are going to move much more peer-to-peer over time. And again, it's not going to happen overnight, but I think that the more that Bitcoin in particular goes up sort of leading the way, the more capital, it's like AI, the more capital is going to be attracted into the space and the faster it's going to happen. So I would keep my eye on Bitcoin. The more faster it appreciates, the faster the traditional financial world is going to evolve into this new world, if not disappear.
Wood envisions a future where traditional financial services are significantly disrupted by peer-to-peer technologies and decentralized finance DeFi. She explains that the current financial system involves numerous intermediaries and toll takers between consumers and merchants. By leveraging blockchain technology and Bitcoin, many of these intermediaries can be eliminated, leading to more efficient and cost-effective financial transactions. As Bitcoin appreciates in value, it attracts more capital into the space, accelerating its adoption and integration into the traditional financial system. Wood compares this to the rapid advancements in artificial intelligence, where increasing investment leads to faster innovation and deployment. She believes that the faster Bitcoin's value increases, the quicker the financial world will adapt to incorporate digital currencies. Please like and subscribe my channel.